always start with the international picture because it matters for Bahrain. Bahrain is a small economy, open economy, and it operates a US dollar peg. So what we are seeing internationally now is pretty good growth, and obviously growth that is very much led by the United States. And I think that overall there is every reason to be optimistic about the near-term global growth prospects. The one implication of that for Bahrain, of course, is that the Federal Reserve now, because of the stronger US growth numbers, because of the higher inflation numbers after 10 years of very, very low inflation, are probably going to continue to tighten monetary policy, and the CBB will have to reflect that because of the dollar peg. So at this point, I think we're still expecting 2 more 25 bip increases this year, and that will obviously then be reflected here as well. What is a bit of a cloud, of course, you all know, on the global growth outlook is this posturing about trade. And just yesterday we saw these new import duties introduced on Turkish steel and aluminium by the United States. There's obviously concern about where the posturing between China and the US is going to go. In the short term, this means uncertainty. But if we keep getting more and more protectionist measures, there's no doubt this will be bad for growth. But I think still too early to tell how far this is going to go. When we look at the performance of the equity markets, you can see people are a bit more nervous than they used to be. So here it was all arrows pointing up, and then because of political risk, because of protectionism, people are getting more anxious. The only region that is going against the current is the GCC, and of course the GCC has benefited from higher oil prices, as you can see. I think we are now at a point where the oil prices have, broadly speaking, reached a new range, which is probably somewhere in the neighborhood of 65 to perhaps 75, even $80. I think the new oil market dynamics will entail volatility. You remember OPEC a while back set out to rebalance the global oil market when there was worry about too much supply. I think they have succeeded. And now there is obviously concern about what is going to happen as a result of the Iran sanctions. Iranian exports have already declined. There is major concern about Venezuela, where the production levels are plummeting. I think that economy now is in free fall, and it is the economy with the largest known oil reserves. So that is contributing to market tightness. Of course, the American shale producers are there to increase output. The US is now is the biggest producer globally, 11 million barrels a day. There have been some limitations on US exports because of infrastructure limitations, not enough pipelines. They're obviously addressing that. One other concern there is, what are the Chinese trade tensions going to do to US petroleum products? And that is now sort of on the list of things that are potentially getting targeted. So I don't think that whoever says there's going to be a magic number for the oil price, very unlikely, but there will probably be volatility now, kind of in this sort of range here between 65 and 80. Obviously, short-term variations in either direction are possible. For the GCC countries, obviously this is broadly speaking good, but it doesn't mean that it's back to business as usual. Very few GCC countries now balance their budgets with these kinds of oil prices. So the fiscal reform efforts will have to continue. What about GCC growth? So these are the numbers for the different regional countries. Last year, for the region as a whole, growth came in at more or less 0%. Okay? Why was that? Because of the OPEC-led oil production cuts. So oil output contracted in all the regional OPEC countries, and you can see Kuwait has the largest oil sector, so the Kuwaiti headline growth became significantly negative, but it decelerated everywhere. What are we looking at this year? This year we are looking at quite a significant trend reversal. So now oil markets have balanced. The Saudis have already started producing more. Other GCC countries are beginning to follow. So last year the oil sector pulled everybody down. Now the oil sector is starting to pull everybody up. The fact that oil prices have gone up means that there's more liquidity. Liquidity is slowly coming back to the regional markets. It's also positive for confidence. And we are seeing good continuity in the non-oil sector of the economy. So we are now looking at a year where all these arrows are turning positive. It probably won't be a fantastic year for growth, but we are kind of going back to where we were in 2015, 2016. Okay? What about the non-oil sector? I've talked about this graph before. This is the best measure we have of business expectations in the two largest regional economies, Saudi Arabia and the UAE. What's interesting about Saudi Arabia and the UAE is that they have both introduced VAT. And you can see there was a lot of positive business confidence back here, partly because people were bringing forward their purchases ahead of VAT. And then confidence plummeted after VAT came in. But you can see whatever doesn't kill you makes you stronger. So things have rebounded quite quickly. So what happened was there was a temporary adjustment. I think there was a little bit of concern, anxiety. What does this mean? How can my company adjust? But people are now focusing once again on the economic fundamentals. And as we saw in the previous graph, the economic fundamentals are looking pretty good. Oil output, as I said, is going up. The Saudis, hiked their output very quickly after the OPEC deal. But it is clear that the Saudis are willing to be flexible. They have become, once again, the sort of ultimate swing producer. And we'll see similar numbers for the rest of the region. Inflation is not much of a concern for the region. You can see the two countries where we've seen a spike are against Saudi Arabia and the UAE because of VAT. The good news is, for instance, in Saudi, the spike was to only 3%, okay, from a low base. UAE a bit higher. But then since then, prices have started, or the rate of inflation has started coming down again. Why? Because structurally you don't have strong inflationary pressures. So the strong US dollar now means that import prices are actually declining somewhat. In the housing markets, everywhere in the region, there's a lot of new supply. In most parts of the region, house prices and rents are either stable or they're declining. So when we look at the kind of biggest markets, the UAE, for instance, prices are still declining. So that means that there's very little new inflationary pressure coming in. What about liquidity? These numbers are the year-on-year rate of increase in bank lending. You can see they're still kind of coming down. Oman, they did some regulatory reform at the central bank that has pushed up the growth rates. The Saudi and the UAE numbers are slowly beginning to come up now, and we expect that increase to accelerate gradually because of the more comfortable oil price environment. Stock markets, we don't really have much of a story there. They have been fairly flat, with the exception of Saudi Arabia and Kuwait. Saudi Arabia and Kuwait are benefiting from significant foreign institutional inflows because they are being included in these benchmark indices, FT Russell, and of course MSCI emerging markets. So Saudi has had a pretty good year. Now let's look at Bahrain. What is happening here? You can see until recently Bahraini growth was pretty stable in around the 4% mark, and then it sort of dropped off a little bit in the last quarter of last year, and even more sharply in the first quarter of 2018. This is real growth. If we look at nominal growth, in other words, growth in current prices, we would have a positive figure because all prices have gone up. But real growth takes away the impact of price changes, takes away the impact of inflation. So we in fact had a 1.2% year-on-year contraction in Bahrain's real GDP in the first quarter. First contraction in a long time. Why did this happen? And should we worry? So this is the graph that breaks up the growth contribution into oil, in the color of oil, into government services, and the non-oil private sector. Okay? So you can see what brought the growth down. It was the oil sector. And there was a temporary maintenance issue. This is regular maintenance, as I understand, of the offshore oil field, Abu Sa'fa. This happens occasionally. You can see the same thing happened in the last quarter of 2016. So this is not unprecedented, it's a regular thing. You can see the non-oil private sector growth did slow down a little bit from the kinds of figures that we have seen here. But I'll show you in a second why I think this is temporary. So what this graph does is it shows you the year-on-year growth rates for the different sectors. And you can see the first quarter was a mixed bag. But every cloud has a silver lining, so there are some green boxes. Green is a good color. Manufacturing, 4.2% growth, up from 1.1% in 2017 as a whole. And in manufacturing, we're beginning to see new capacity come up. Now there's the new Mondelez facility that is starting. And of course, next year we'll see Alba Line 6 starting, which will be a much, much bigger impact. You can see construction, 6.7%, which is a good number. It is higher, much higher than the 1.8% in 2017 as a whole. It is even higher than 5.7% in 2016. The reason why, as an economist, I get excited about construction growth accelerating is because it is a sector that has strong linkages to other non-oil sectors in Bahrain, in the GCC. So when the construction companies produce more, they buy inputs from manufacturing, they buy cement, they buy metals, etc. They obviously buy stuff from the trade sector, so that's good for growth there. They stimulate financial services because subcontractors can take out credit facilities because of mortgages. And they obviously support the real estate sector, which also had a pretty good quarter. And the construction growth tends to come in waves, so it's not a one-off thing. So this suggests that there is, if you like, a new wave of activity now that is building up, and other numbers support that. On the negative side, you can see the oil sector drop, a very big drop, okay, but temporary, as I will explain. The other sector that saw a drop was hotels and restaurants. And I think that is partly linked to the fact that we have seen a lot of capacity addition at a time when demand growth has not kept up. So that obviously has implications on profitability, which is included in the value added. We expect this to normalize over time. And this other category, which is mainly import duties, so that is reflected